So when you're looking at the entrepreneur, i.e. management, I mean, who are you backing? So when you're raising capital, and we sit in the room with a lot of these businesses, the first thing you look at is you look at management, right? The people who are driving it. You want to know that they've got enough skin in the game, i.e. they don't overpay themselves. I mean, one of my favorite questions to ask in a management meeting or in these companies is, how much do you pay for rent? And why is that an important question? Because it gives you a really good understanding if they spend a lot of money on rent and if they're cost conscious, right? Or their wages. What's your wages like? Or how much cash have you invested in the business to date? I'll give you an example. Domino's Pizza, for example, have developed an innovative technology that you can know when your pizza is ready and real time and vice versa. So we saw a company, it's an Israeli company, there's a lot of actually tech coming and companies from Israel or San Francisco or Asia and looking to list on the ASX, and I'll go through that. But this specific company is valuing their technology at $40 million. When I asked how much money has been invested to date, it was $3 million to date. So your upside on cash is more than 10 times, which is a nice return for those people who have come in, right? Normally the golden rule is probably 1 or 2 times on cash. Right? You want to know that that's fine. If they've invested $1 million to date, well, you don't want to pay more than 2 or 3 million. I'm not saying looking at different revenues and multiples and EBITDAs and the growth and just all on that. But what we also look at is the capital structure, and I'll explain what the capital structure means. The capital structure is probably the most important slide when you're looking at these type of opportunities. And what the capital structure tells you is how many shares on issue, what did everyone pay, what were the previous rounds that they raised capital at? Because the issue is for guys like us, is we need to know, all right, that's fine. If you're valuing the business at $20 million, who came in at 10, who came in at 5, and who came in at 1? And if you are listing the company at $20 million, will the $1 million investors, are they escrowed, i.e. will they be able to sell their shares on market, and what impact that will have? Management's very, very important. I mean, you need to look them in the eye, you need to know how much skin in the game, you need to know how much they get paid, how much they pay for rent, how much cash has been invested to date. Taking Pico, for example, which is an early stage business. I mean, Pico, for example, Andrew is not paying himself a wage. He's getting accrued wages based on equity in the business. He's got a lot to lose, right?